After so many years of progression, the financial industry has become highly sophisticated. Sometimes I feel that when we investors are facing a huge financial conglomerate, it's a little like a kid facing a huge toy shop. A lot of you probably have the experience of how difficult it is to drag your 5-year-old son out of a mega toy shop without buying him something, whether it's a train or a Mickey Mouse. And it is a similar situation in the financial industry. Back in 2000, there were about 6,000 plus mutual funds being offered in the US, with an annual attrition rate of about 7%. Now, based on that attrition rate, you would expect that the number of mutual funds would reduce to about 2,800 by 2012. In reality, however, back in 2012, there were about 7,000 plus mutual funds being offered in the US. Obviously, what happened in between was that financial institutions, they have kept churning out new strategies and products to be offered to investors. And sometimes it feels like we investors are an obese patient being flooded with chocolate and candies. And what the financial institutions care is not necessarily whether the strategy makes sense in the long run for the investors, rather how much assets they can gather and how much fees they can generate from selling such kind of strategies to investors. Another good example of the predatory nature of the financial industry is Jimmy Cramer, who was a host of a popular show on CNBC called Mad Money. Back in March 2008, he made a recommendation to one of the investors who called in to not move his money from Bear Stearns. And 3 days later, the stock price of Bear Stearns dropped 92%. And later, Mr. Cramer was questioned by Jon Stewart in one of the daily shows. And Mr. Cramer replied that there's a market for it. To which Mr. Stewart replied that there's a market for cocaine as well.
There's a market for it, and you give it to them, and I think
there's a market for cocaine and hookers. Well,
and sometimes I feel that we investors are probably flooded with such cocaine-like short-term investment advice, and therefore a highly intelligent investor should be aware of such kind of predatory nature of the financial industry and have a sound system to defend him against such traps.